Well, it's officially fall and the housing market is still crazy hot in places all over the US. Will it ease up anytime soon? Well, today we're going to look at the 14 indicators and see what they say. The U.S. housing market has been unseasonably strong this fall thanks to COVID, but will it ease up as we head into winter? Let's look at the 14 indicators to find out. But first, please take a moment to like and subscribe to my channel. It doesn't cost anything and it helps me improve my visibility on the platform. All right, so let's dive in. Number 1, existing home sales. The latest National Association of Realtors report shows that in August, home prices rose 2.4% over already high levels in July, with sales up 10.5% year over year. Nationally, the median home price rose 11.4% to $310,600, marking the 102nd consecutive month of year-over-year gains. What's interesting is that most of the activity is happening in the South and Midwest, traditionally less expensive areas of the country. The under $500,000 price range is the most active, and under $250,000, sales are actually down from a year ago due to lack of inventory. So, who's buying? First-time buyers are leading the pack, slightly ahead of this time last year. With investors, that includes second home buyers, buying at the same rate year over year. Cash and distressed purchasers are down a hair, but significantly, this year in August, it only took 22 days on average for a house to be listed and go into contract versus 31 days the year prior. And NAR's overall recovery index is looking strong. So that's the national situation, but stick around to the end to see some really interesting bonus charts. Plus, data from a news source that brings these numbers more up to date, including a reliable indicator predicting price movements in the months ahead. Number 2. New listings. Zillow is reporting that as of September 26th nationally, there were 9.5% fewer new listings added to the market than 1 year ago, with total inventory down 35% year over year, which is huge. Sellers are basically hunkering down. And by the way, Zillow has a fantastic interactive Tableau chart on its weekly market reports page that you can play with and see a lot of different statistics, and I'll put a link to that below. Number 3. Pending home sales. NAR's latest pending sales report is from August 2020, with pendings up 8.8% from July and 24.2% year over year, with their index at 132.8 points above baseline. But Zillow is reporting that sales are up 22.2% year over year as of September 26th, though they're down 4.6% from the prior month. So finally, a sign of seasonal slowing as we head into fall. Number 4, month supply of inventory. As of August, NAR was reporting that on a national level, month supply of inventory was down to 3.2 months, a slight increase from the 3.1 months reported in July, but still very, very low. Remember, anything less than 6 months is a seller's market. 6 to 7 months is considered a balanced market, and anything above that is considered a buyer's market. And by the way, if you want to track the housing market in your local area, download my Housing Market Indicators checklist. It's free, and it shows you the 14 indicators to watch and where to find the data. And I'll put that link below. Number 5, new home building permits. Nationally, 1.476 million permits were issued as of August 2020. A bit up from July, but still lower than decades past, and much lower than the years leading up to the crash of 2008. Number 6, interest rates. Interest rates today for a 30-year fixed mortgage are just over 3%, still at historic lows and about 2 points higher than the official rate of consumer inflation. Number 7, purchase mortgage applications. Mortgage applications decreased 4.8% from the week prior, according to the Mortgage Bankers Association, for the week ending September 30th, 2020. This is still 22% higher than the same week 1 year ago. The American Enterprise Institute notes, however, that rate locks continued their upward trend through the week of September 25th. which indicates that buyers currently in the purchasing process are feeling confident enough to lock their rates to close. And here's a fascinating bonus chart showing where the greatest growth in rate locking activity is in the US. Number 8, unemployment. Nationally, the official unemployment rate is down to 7.9%, now below the height of the aftermath of the 2008 financial crisis. The broader U6 unemployment rate is at 12.8% as of September 2020. This includes people who are working part-time who really prefer to be working full-time. Shadow Stats puts the real unemployment rate at 26.9%, which he calculates using the prior standard of government reporting before long-term discouraged workers were removed from the equation in 1994. Nationwide, continuing claims are down to 11.8 million, still very high, but moving in the right direction. Now, this is an interesting bonus chart that I found on Calculated Risk, link below. And it's showing the number of jobs lost permanently as a percentage from the peak since the onset of COVID compared to the prior 2 recessions that also resulted in permanent job losses. As more big companies shed thousands of jobs in the coming months to adjust to the new reality, this will be interesting to watch. And here's another bonus chart that I've never shown you before. It's from HubSpot, who develops software products for inbound marketing, sales, and customer service with a current market cap of $13 billion. Since the beginning of the year, they've been tracking the effect of COVID on the business activity of their clients in different industries. And look at this, it's fascinating. Here you see before COVID, where travel, entertainment, construction, and consumer goods were still spending, to the lockdowns where everything died, to post-lockdowns where the construction industry just took off. Consumer goods, software, and manufacturing also popped some, showing more strength here at the end in the week of September 21. So it's interesting to see which sectors are recovering or not recovering. Expect more layoffs from businesses in those industries below the baseline as they try to fight their way back. This is an interactive chart that you can play with, and I'll put the link below. Number 9, mortgage defaults and forbearance. According to Black Knight, the early stage delinquency rate for mortgage loans decreased 9% from July to August. Serious delinquencies, however, which are those that are more than 90 days past due, increased 5% in August for the 5th consecutive month of increases. The delinquency rates include loans that are at least one payment past due but are not yet in the process of foreclosure. While there are nearly 2 million more seriously delinquent homeowners than at pre-pandemic levels, foreclosure activity remains muted due to forbearance plans and foreclosure moratoriums. According to the Mortgage Bankers Association, the share of loans in forbearance dropped to 6.87% as of September 20th. And this interesting chart shows the various percentages of forbearance by loan type. Number 10, foreclosure sales. According to Realty Track, there are currently 257,332 properties in the U.S. that are in some stage of foreclosure, default, auction, or bank owned. This is down roughly 20,000 from the last time I checked. In August, the number of properties that received a foreclosure filing in the U.S. was 11% higher than the previous month and 81% lower than the same time last year. In the U.S., 1 in every 13,691 properties is in foreclosure, which is down a couple thousand from the last time I looked, with the leading states being South Carolina, Florida, Iowa, Maryland, and New Mexico. Number 11, Google Trends. Searches for buying a house had been trending down since mid-July, but lately we've seen a small uptick. Perhaps that fall bump we sometimes see when the kids go back to school? Seller interest continues to trend down after not much of a rise at all this selling season, just another sign of the continuing conundrum of low inventory. Forbearance searches had been trending down since April, but have popped up slightly, so we'll see how that goes. Number 12, portal traffic. Zillow traffic dropped slightly while Realtor.com increased slightly through August, so basically a wash. The bottom line is consumer interest remains strong. Number 13, showing time. Showings are up 15.5% over last year, though showing the usual seasonal trend line heading down into fall. Number 14, demographics. Nothing much has changed here. Residential real estate is driven primarily by life events, and the millennials continue to buy as their families expand, while the older generations are not putting enough homes on the market to satisfy that demand, and that is helping to keep prices up. Now, remember that bonus indicator that I mentioned in the beginning? If you've been watching me for a while, you know that I'm a fan of Altos Research. They track U.S. home sales data in real time for the real estate industry. And what I love about them is that they have a really strong grip on the seasonal factors, and they can fairly accurately predict what's going to happen to prices 1 quarter out. I'll link more to their methodologies below, but here's today's tip. Watch the asking prices in your market to see if they're increasing this month, especially if iBuyers and flippers are active in your market. These houses will be on the market in October, go into escrow in November, and close sometime in December. As of September 14th, we're at 8% appreciation year over year according to Altos. And new listing prices are trending up along with sold prices in many areas. So look for headlines in December, January about what an incredibly strong year 2020 was for housing. So where are prices going in 2021? First of all, let me say this. I am not married to one side or the other, whether prices go up forever or there's a housing crash. I really don't care what the outcome is. I just want to know what's coming ahead of the herd so that I can take action if action is warranted before they do. When the data changes, I will consider that and possibly change my opinion on where things are going. And any prediction I make is an educated guess in the moment, so keep that in mind. We'll probably continue to see strong buying momentum until the snow falls. And it looks like, based on what Altos is tracking, that we'll close out 2020 strong with some impressive price gains, and I'm personally guessing somewhere in the neighborhood of 6 to 8%. However, we do have large company layoffs looming on the horizon, with some economists predicting that jobs won't fully recover until 2025. Eviction moratoriums ending in December, 1-year forbearances ending next April, and new government stimulus potentially in the works. Honestly, right now, it's a crapshoot. Against all this, you have the feds keeping interest rates low for as far as the eye can see, which props up housing prices because people can afford to borrow more at lower rates. Right now, I think they're letting the housing market run hot in hopes of leading the greater economy down the road to recovery. The U.S. is still high on stimulus, and it's going to take some time to come down. Congress is talking about injecting another shot, which I believe the Fed really needs to keep the financial system together. So with that on the horizon, it's hard to predict anything, except death and taxes. You can count on those. So that's what's happening as we head into fall. For those of you waiting for a housing crash, just keep waiting. For those of you who need to buy now for pressing personal reasons, it's fine if you have a stable income, a good financial cushion, and you plan to stay for a long, long time, like 10 years. For those of you thinking of selling, you can still do it, but you need to do it quickly and you need to price the house to sell. And I did a whole video about how to be a successful seller, which I'll link to here, because the market will slow as we head deeper into fall, as it does every year. So, are you buying, selling, or waiting? Put your thoughts in the comments below. As always, thanks for watching, and I'll see you next time. Yeah, so actually, this video is a do-over. I originally did another one, and it was so pretty. It was out in the woods, and it looked amazing. And when I got it back to the editing studio, it was completely just wind noise all over the place, and I was like, ah. So I had to reshoot this. I'm going to include the bloopers from that video because there were a lot more of them, and I think you really need to see how YouTubers suffer to bring you their art. Well, in today's video, we're gonna find out. Oh my God, all right. So look for headlines in December. Phone. Recovery. Recovery. I can't keep it off my face. High on Cumulus. Okay. Oh my God, I can't stand it. 15 minutes of me trying to get hair off my face. Okay. My fingers are so cold, I can barely move them. Okay, I think that's a wrap. And if not, oh well.